Previously on the D-Files.
Well, I was actually going to say, before you jump in, just for the viewers that might not be too familiar with everything going on in Curve, I was hoping one of you could elaborate on some of the issues right now.
Well, the founder of Curve has a shit ton of Curve, like over $100 million worth of Curve or something like that. And he put it all up as collateral and then borrowed a ton of like 60, I forget, it was like 60, $70 million against his collateral that he put up. Then news got out that he's buying up an Australian mansion for $40 million or something like that. So Gauntlet, who does the risk assessment for Aave, goes, hey, there's a chance that he's not willing, like this is never going to get paid back. You just put all this money into a house.
Well, one, I don't think that, I think that he has enough to cover his position. Two, I mean, that's one of those things why it's super important to look at liquidity when you're a lending protocol. If you are letting people use a token as collateral and there's not enough liquidity for it in case of liquidations, yeah, you're bound to get. I mean, I think we're in a where Curve is okay is, again, it's Michael. Most people know him. He's a pretty known figure within the crypto space. I don't see him letting that ride out.
Oh boy. Well, that didn't age too well.
Hello, everyone. Welcome to the D-Files, the crypto podcast produced by Beefy, the multi-chain yield optimizer, giving you some of the most competitive yield in all of DeFi. If you got crypto, consider using Beefy. I'm your host, Jorge, and today I am joined by Weso, the lead developer of Beefy, as we dive into some of the crazy news that has happened in an incredibly short amount of time. In particular, the first thing we're going to be diving into is the Curve hack and what this means for the entire DeFi ecosystem. Now, before I dive into this, for those of you that are not familiar with Curve, Curve for the most part is an application that creates pools that for the most part work with different assets that have similar prices. So STETH, Rocket Pool ETH, stable coins mostly. And this has been one of the most trusted DeFi protocols in the entire space. And so many other protocols build different varying applications on top of Curve. So Weso, I was hoping for our audience, you could dive into the Curve hack and what exactly is going on.
Yeah, the Curve hack was one of the craziest events. And if you thought like this bear market couldn't have anything else like crazy happen negative to DeFi or to crypto, apparently we keep getting proven wrong because over and over something like new, something that we believe would never happen happens. So Curve, obviously, like you just said, was is still like one of the most trusted protocols. So it's a stable swap. It's actually where I think it's probably the highest TVL DeFi protocol that exists. And it's a good, like, it's been around forever. It's been trusted, never had any issues. And I tried to take a few days off from crypto. And then I look on Sunday and it says that, there are Curve pools that are being drained. And this is something that, we've seen before, people announcing something specifically wrong with Curve, and there's been known to be exploitable attack vectors for people who build composably on top of Curve, because there's a reentrancy flaw in viewing like the price of the Curve token, and somebody, some protocols have used that as an Oracle solution before, and people have been able to re-enter and basically manipulate that price and exploit them. So sure enough, I'm looking at the feed thinking that that's what's going on. That's another reentrancy problem. This has happened multiple times. Curve has warned people. Auditors have warned people. Don't use the Curve feed for this specific reason. And then I go to see that, no, it's not a composable function that felt on Curve, that Curve itself is having issues and pools are being drained. And we go to look at it, and it's actually had to do with, specifically, Curve uses a different contract language than a majority of DeFi protocols. So like Beefy, Aave, let's see, like pretty much any of the big ones you can name, Uniswap, they're all written in Solidity. But Curve is written in Viper, which is essentially like a Python version of smart contract language. Okay, and there's only a few protocols that have written in Viper. Yearn has some vaults in Viper, but Curve very specifically has written all their contracts in Viper. And Viper had an actual issue in Viper itself, where in certain parts where there could be reentrancy issue, Curve marked non-reentrant, which should have given reentrancy protection on the contracts. And I guess the flaw was in the Viper compiler, where it didn't actually protect anything, and people were able to re-enter and drain the pools. And so it becomes like a situation of like, I mean, was it really Curve's fault? Maybe if you were testing to break the pools in this manner, you could have figured it out. There was actually an issue with these specific compiler versions of Viper that was like in a Git repo like a while back. So somebody who was doing the malicious behavior could have been like browsing for potential open issues and then looking to see if they can find a compatibility on deployed protocols, which I think is what happened here. But it's something super scary because as a protocol, we're looking at every line of code that we write specifically to make sure that, hey, there's no sort of like attack vector. But here with Curve, it's actually the underlying compiler that had the issue, which is something that most protocols just sort of trust that's going to work. Even on the Solidity side, it's really, each version is compiling it and sending it to the EVM. So you're trusting that that Solidity version does exactly what it says you're going to do when you're coding it. If it acts differently than it says it's supposed to, there could be a lot of underlying issues. And so, hopefully we don't see a flurry of people trying to look for compiler-specific bugs and exploit us, in that manner. But crazy Curve exploit. The potential fallout has been really interesting to watch. I don't know if you're familiar with that.
Yes. So before we dive into the fallout, so Michael Egorov apparently owns a large portion of the Curve supply. And apparently, like any CEO in the real world, they may not want to sell their stocks because they believe that the asset, will appreciate in value over time because they believe in whatever they're working in. So they do a strategy where they go to the bank, provide collateral in their shares of their business to get access to money right away. And so in this case, he used his Curve tokens across various lending protocols, which now have bad debt. Like they don't have enough liquidity to cover all these positions. No, is that correct?
Yeah. Well, there's two things. One is obviously to be able to access the dollars quickly without having to sell the token and having an impact on the token price. That would be one reason you put it up for the lending, but also for tax implications. It's sort of like if you have all of these shares of stock and you sell everything, then you have to pay tax on the gains, but you don't have to pay tax on the borrow in a lot of places. So if you put like, let's say $200 million up and you borrow $100 million, not only are you still having obviously your active Curve position, which can still go exponentially up and you haven't lost that position. You're not selling against that position because you're not like selling to, $100 million to get $100 million and then, taking the Curve price. But also you may not have to pay tax depending on your jurisdiction because you're not taxed on the actual borrow of that asset. And so that asset's liquidated. So there's multiple reasons why people do this. And actually it's like definitely a cheat code for people who own a lot of stock is that they essentially just take out huge loans against their capital position instead of selling it on the open market. The issue right now that's going on is that one of the exploited pools was Curve ETH. So all that Curve that was in the Curve ETH liquidity pool was drained, and it was the largest liquidity of Curve on mainnet. So not that like these, there was already a discussion a few weeks ago about him, taking the loan out and buying the Australian mansion, and then now saying, hey, well, if we're never going to repay these loans, is it even possible to liquidate all of this Curve that has, collateral in these lending protocols on chain? And I think majority said, hey, no, that's it's not possible. Now you just took the largest liquidity source and drained it. So now there definitely is no way for them to liquidate all of the Curve. And so now you have each independent protocol, you have Frax, Aave, and Abracadabra, who all have isolated risk to this now Curve debt. Essentially, if Curve's price drops a certain amount, it'll be bad debt, and then there will be no way to recover that bad debt because you can't obviously have any liquidators won't come and liquidate it because they would sell at a loss. There's no way to do the on-chain liquidations. So now it's each independent protocol. You have Abracadabra, who just put proposal in that was trying to do like accelerated interest rate increases. So as the loan becomes closer to becoming bad debt, like the interest rate goes up exponentially, different than what the protocol is doing now. essentially making it so that they have to repay the loan quicker and that they get all the, it's accumulating a lot more interest. And people are kind of like, I mean, honestly, what do you think? This is DeFi because of one position. Should you now go and change how the protocol functions because you're trying to, I guess, liquidate one risk? Yeah,
right. Well, I think for certain protocols, centralization is a bit of a spectrum. But, this also kind of reminds me of the, I forget the name of the protocol, but it was built on Solana. And there was one guy that was just borrowing Mango. This reminds me of a lot of the issues that occurred on Mango markets. And I think like it's such a unique experience right now because we're all asking like these really tough questions about decentralization and versus centralization versus security. And the other question is like, it's obviously I'm Mike Egorov for taking these huge risks with these massive implications. Like it may have appeared in his mind that this was a 1% chance. Well, the 1% chance is here. And so I'm starting to wonder, like, is it not also on like the people that manage Abracadabra, Aave, and like these other protocols for just allowing these things to happen? Or is it because these applications are decentralized and the code wasn't written well, and therefore Michael was able to take out these massive positions despite there not being enough liquidity to cover these calls if they break?
It's not like it just happened, right?
Mm-hmm.
It actually, we were just talking about this a few episodes ago about how, would there be a role for institutions to come and essentially play this like liquidator where they can take things like they, come and then, cover some of the assets, liquidate off chain, and then come back and, do some more, incremental liquidations. Like if on-chain liquidations aren't going to cover everything and we have, bigger loans, and we can't get enough liquidity in DeFi in order to cover those big loans, is there a way for maybe off-chain providers to come and do the liquidation so that we can still have, proper DeFi, right? It's all based upon like what the on-chain liquidity is. And then we talked about how each individual chain, its own individual liquidity matters because if you can't liquidate on that chain, then, you're going to have a bad debt situation isolated to that chain. So it's not about total liquidity. Right. It's about, chain liquidity. I think that, these curve positions, like let's say that you're Aave, and this is Aave V2, right? So they're already on Aave V3. They have been for a while. But let's say you list Curve 2 years ago, and Curve's price is 100 times less than it is now. And Michael goes and puts up like a $2 million Curve position or something like that. Now that Curve position becomes like $100 million because of price appreciation. He's continued to borrow against it. At what point is it Aave's problem? And how can you really solve that issue? You can't remove permissionlessly the debt that's already there. But because of the increase of value of the price, the person is able to borrow more and more funds. So I guess it's kind of like you have to monitor as a lending protocol all the time what's happening and where the risk possibly is. But at a certain point, it becomes very hard to protect yourself against this because there's so much volatility in these markets. There's so much that can happen on day to day. There's hacks. There's liquidity that's there and then liquidity that's gone. And so, I mean, I gotta say, like one of the riskiest, toughest protocols to run right now is lending. Because not only do you have to make sure that like your stuff's not going to get hacked and drained, but at the same time, it's all of these risk profiles against these bad debt issues where you're affected by almost everything that happens in the ecosystem.
Mm-hmm. Yeah, I mean, I 100% agree. I think by far some of the largest and most controversial things that have happened in DeFi have been, for the most part, been surrounded by some degree of lending and borrowing. And I think that's still the science that maybe has not been quite figured out yet as far as creating like a decentralized permissionless technology. And I mean, don't get me wrong, because these things have worked incredibly well, but it just feels like very, very crazy that someone was able to, conduct themselves in this fashion and put so much at risk. So I guess the next question is, just based on what I'm seeing on DeFi Llama, it looks like a lot of TVL has started coming back. Apparently, Curve Finance is up 38% in TVL in one day. So people have brought back so much liquidity. So it seems unlikely at this point that Curve is going down, but
No, and I don't think anybody truly believes that.
But my question to you is, in this hypothetical, let's just say that Curve does go down. Is this going to be irreparable damage to DeFi or Ethereum's DeFi ecosystem?
We thought,
And if so, how would that be? Could you describe that?
I think we thought that was the case with everything that could possibly happen. Like, it's like,
Right.
oh my God, if FTX collapses, this would be horrible. If Luna collapses, I don't know how we survive that. That's billions of dollars. And it just seems like every single like possible thing that could be the worst possible thing to happen to us just has happened to us in this market.
Mm-hmm.
So do I think that it would be the end of DeFi? No. Would it be a very big struggle? Yeah, because I mean, I'd say one of the harder things we're dealing with right now is trust. Like, how can anybody trust to do anything in DeFi if continually, like, every time I want to talk about it with somebody that they're talking about, oh, well, yeah, I saw this hack happen the other day. Oh yeah, all these like hundreds of millions of dollars have been drained, right? I think that it's just like not sustainable. Nobody's going to put their money into a place where we're not going to get really like mass adoption if people can't feel safe with it, and we obviously can't insure all of DeFi.
Right.
So like, what can we do to make it more secure, obviously more trusted, and that's why it was really disappointing to see something like this happen with Curve, because it's a protocol we all trusted like was going to work exactly as it said it was going to work, and nothing was going to happen. And so, obviously it just goes to show you that there's risk associated with everything in DeFi, and that we just got to get better at everything, starting from, the compiler level all the way up to the contracts, the way we handle ourselves, even just like protocols and their operational security standards. Like I think was a couple protocols the other day were just like their whole Discord was hacked and, sending spam messages. So there's people attacking you in every front right now, whether it's, via contracts, via social engineering, attacking DDoSing the website. They're trying every single method they can to attack crypto and DeFi, and we got to be as vigilant as we can to protect our users and ourselves against that.
Right. And you brought up a good point about making these applications more trusted, and I think there's a dynamic there, right? Because you want to continue the trustless nature of things. We don't want to have to ever get to a point where where some degree of maybe like a social credit score or something of that nature influences how you use these things. But you reminded me of what some people are working on is some type of Vitalik wrote a really good piece on this. He came up with this idea called the soul-bound NFT. So instead of having to reveal your identity, you could show the history of your ability to pay back like certain loans, by submitting this NFT to a protocol. So I think like that might be a nice balance, so it can continue to be trustless. So I mean, we'll see where that goes. On the other hand, I think it's good to see that Curve is recovering, but I'm really hoping that
Curve,
after this we see some major changes.
Curve will be just fine.
Yeah.
Right now, what's the biggest thing to watch is what happens with the CRV positions. One, it's to see that these lending protocols act as they should, right? We're seeing like out of the three of them, Aave, Frax, and Abracadabra, which one was the first one to get repaid? It's Frax because of their structure, their interest rate structure. Essentially, it was being so penalized. I think he was getting to a point where he'd be liquidated so quickly because of all of the increasing interest from his borrowed position. And so I think that's why you saw like Abracadabra trying to, emulate the Frax model because of it basically was the first in line in order to get repayment. But we're seeing DeFi, like really everybody sort of like stick together. And I think there's been multiple instances of people seeing now Michael doing OTC deals with major protocols and major people. I think Justin Sun, Yearn, a whole bunch of people have been basically doing OTC Curve deals in order to get him some more, obviously, liquidity to pay off some of these positions. And I think it's because everybody sees it as it's important for us to help him out when he's in a bind, but at the same time, make sure that these catastrophic lending liquidations don't happen. But all in all, I think regardless of what happens, everything will be fine. We'll keep building. We'll move on, and there will be another bit of drama for us to discuss in a month or so. So,
yeah, I mean, Weso, I gotta say, those some very powerful words. I definitely feel very comfortable and not scared of anything that could possibly happen ever in DeFi, ever.
yeah.
No, but I'm with you. I'm glad to see that everyone's kind of working together. And I hope Michael's had a very, I had a good learning experience. I mean,
he still has his mansion, I think. So
there were actually people watching the Australian real estate market to see if the house went on.
Yeah,
if the house went on the market.
I believe it.
That's it.
I believe it.
So I mean, but as far as I know, it appears that the house is not on the market. Sorry for the billionaires and multimillionaires that were really interested in buying that house, but I guess not. Maybe it'll be a crypto museum one day.
I don't know. I mean, to think of like, I don't know how much or any of the details about like how much he paid for the house, or I think the house is valued at 100 million. So I don't know if he had how much he actually put down a down payment or paid in cash, or what he actually has liquid. But if he still has the house, he still has some money. So
I'm sure he still has money.
He's got
all those connections.
He's got plenty.
Oh yeah, for sure. So moving on from there, speaking of money, in other gigantic news, the SEC has gone after and brought charges to Hex founder Richard Hart with misappropriating millions of dollars of investor funds from unregistered crypto asset securities offerings that raised more than $1 billion. I mean,
who would have thought?
Who?
Wow. Thought, what a surprise.
I mean, I'm not, until more details come out, I'm not going to say that the man is guilty, but I will say flaunting your wealth after, raising money for a crypto project is not exactly the best look, at least to me. I was raised to be very humble. So
did you ever see this guy's like tweets, or what do they call it? Are they something now with X?
X's, I guess. I mean, this guy, I don't follow him on Twitter, and there's a reason for that. I just don't. So, I try to reduce the amount of ridiculous crap that I see every day on Twitter.
He would point out each part of like his attire, and then and then show out like, oh, this is designer shoes, like, Rolex watch, Patek, or whatever and it was mostly like this. I mean, he must have just been a lonely child or something. And he needs all the attention in the world, and this is what's getting him that. But I'm sorry if we continue to get scammed by people like Richard Hart. I don't know what to say.
Yeah,
it was the SEC coming after him is like the biggest softball we could have possibly given them. Like, it is. He very apparently looks like a scam, smells like a scam. The guy's a scam. And every time you deal with these things, I think he just like printed all of these like fake tokens on Pulse Chain that people can, and then claimed it as the biggest airdrop ever for tokens that have zero value. I mean, for the rational mind, it was very easy to see, but it just goes to show you that in this world, a lot of people come here thinking that they're going to make themselves millionaires. Like, crypto's here because I've, only make, X amount of money, and this is my chance to become a millionaire. I'm going to come and I'm going to invest in these things, and they're going to go really, high in price, and I'm going to make a ton of money. And it's so unfortunate that that's the mindset that these people have. And it shows, they come in and they believe and they follow these cult leaders like Richard, and he just drains them. And it's not just him. I mean, we see it time and time again in this industry, and, hopefully we can clean it up as best as we possibly can, and actually build like, really good decentralized financial products and make it less about the scam market that we see. I mean, we just saw the whole thing with Base, with Bald token or whatever.
Right. And people got rugged. I mean, this thing went up an astronomical. I mean, it made millionaires. It also made poor people, like, in an instant.
And I guess that's maybe that's the thrill. That's the Degen thrill that you get. But some people are, they're gambling. They're playing that game, right? They're coming here. They know exactly the game they're playing. They're going to invest in something that probably has no utility, has a possible to rug them, and they're going to hope that they can get out before everybody else. So it's a gamble to them. But others, there's a lot of people who are probably unknowingly investing in these things, thinking that there's going to be something in the future. They're going to bag hold it, diamond hand it, right? And then those are the people that get hurt. Then you have people like SBF who's rugging the Bald token.
Oh my God. Okay, now I think I'm going to side, as far as this FBF is concerned, with Bald. I think I'm going to side with Tiffany Wong here, because I think it's fairly reasonable, based on his gag order, to assume that maybe this guy only has dial-up internet.
Sure, sure.
And
he's definitely not treated any differently than anybody else.
He is. But I think like look, I'm not an apologist for the guy. I think, and this is just my opinion, so I don't know how the entire court case is going to go, but I do think that he definitely, you can't just like be CEO of a company and have no idea what's going on. So I definitely think Sam Bankman-Fried is a grifter, scam artist, and stole billions of dollars, was able to play both sides in politics, but mostly one side, and play governments around the world and steal people's money, and gave such a bad taste in the mouth for so many people in the industry. And for me, that's what Richard Hart did. Even if he was like not a scammer, let's just say hypothetically he wasn't. How could like going online, flaunting your wealth in that fashion, how does that make a good light? Beyond just making money, the whole point of the space is to create decentralized technologies that are permissionless and trustless, and like make the financial tools more accessible to people around the world, banking services and so on. And that, I think, is like a very how do you say, like moral thing to try to do. It's and it just excuse my language, I try not to swear on the show, but a bit like this just pisses me off, and that's why I don't follow him. I never followed him, and it just sucks because people see the wealth and they think that could be me. That could be me with the watches, and that's what I think his strategy was.
How do you build a cult? There you go.
You make people feel small,
yeah,
and then you provide a solution to like how they can ascend to this type of wealth and to have this type of prosperity. So this is a crypto show, so I'm trying not to get too deep in the weeds.
It comes down to simply the dopamine high he gets from the attention.
Right.
And that's it.
Absolutely.
If he got zero attention, he wouldn't do it. He gets all the attention. He gets his cult following. And obviously it's led him to be able to get so many people to invest in the Hex token, to Pulse Chain, to all of that. We talked about it on another show, the interactions I had with the Pulse Chain people, essentially trying to sell me this, come to PulseCon, biggest billboard advertisement in the whole world, girls in hot tubs, they have a brand that they're selling, and certain people eat it up. But for him, I think it's a mix. One, building the cult to scam, and then second is to obviously get that dopamine high from all that attention he gets. So we just got to stop giving people like that attention.
Yeah, and before I totally forgot to mention, as I was introducing the topic, it's also important to mention that all the tokens that are listed in this lawsuit have dumped below 50%. Hex, Pulse X, and I think there's an element here, because although I can't confirm it, if I was sued by the SEC and I had a ton of crypto that I needed to liquidate to get money for some top high-end lawyers, which certainly Richard Hart can afford, I would probably dump some of my tokens. So I have a feeling that it's a combination of his followers starting to dump. Like they're like, okay, now I can see the light, between the ferns, and they're probably dumping. And now, obviously, I think Richard Hart is probably dumping on his followers as well, because the volume for those dumps are absolutely insane. I mean, the chart just looks crazy.
I think you could just put the meme always has been right here, because it doesn't, just an opportunity to, I guess, dump on your followers. That's always the end game anyways, right?
Right. Yeah. At the end of the day, yeah, that's what I think, And that's just my opinion and Weso's opinion, but
Just our opinion. Sorry, Richard.
sorry, Richard. No offense. Also, totally forgot to mention, great moment here. Nothing on the show is financial advice. You should, or legal advice. You should definitely consult a lawyer or a financial advisor. Weso and I are just people that live on the ether of the internet.
Yes.
So,
Yes.
full disclosure. Always, everything is in the description as far as our disclaimers are concerned. All right, so we've touched on Richard Hart, not physically, but through spoken word. And now, the next thing that I wanted to dive into, speaking of hacks, I gotta pick your brain on this. I feel like this has been quite the saga. Multichain, one of the largest bridges. It feels like every bridge has just been hacked left and right. It appears that some of the founders have been arrested. Let me pull up this article right here. So apparently, as of July 19th, according to this, two founders from the Multichain team, Zhao Jun, and I believe his sister, okay, it might just be Zhao Jun, but has been arrested by Chinese authorities for this hack.
Let's do a timeline of events here, because this is one of the most wild stories I've ever seen. And we've seen some wild stories here in the last year and a half.
Absolutely.
I mean, I was thinking about this the other day. If they made like a show about crypto, we already have like 10 seasons worth of content in like 1 year.
God.
It's insane.
Tell me that.
It's so true. Okay. First of all, Multichain is they have $1 billion of assets bridged across multiple blockchains. Actually, it's like 25 or something like that, different blockchains. Something that actually at Beefy we used to bridge the Beefy token had, I think, $3 million investments from Binance. So been around for 3+ years, had a few issues earlier on, but has been pretty much like running pretty steadily for the last 2+ years, which for bridge providers is saying a lot, because a lot of bridges have issues in itself too. Supposedly was decentralized across, I think it was like 20 sort of nodes run by different parties. And the way the system worked was essentially you would go and, enter the multi-chain bridge. The nodes would come to consensus about, what the action was that happened, and then execute on the receiving chain. And so they had multiple different products built upon that. One, there's obviously the bridge product, which you're able to bridge a whole bunch of tokens, which is what the $1 billion of value was in multi-chain. But other products like Curve was actually using multi-chain's any call solution to do a lot of their communication with their sidechain contracts. So in order for them to basically execute bridging the Curve, and that not the actual Curve itself, but execute the gauges, so letting the gauges know how much they're going to give away on the sidechains based upon the voting from the previous epoch, Curve would use any call solution to do that. So not only was, $1 billion locked up in the protocol, but also Multichain was trusted by some of the largest protocols. Obviously, some of the largest centralized exchanges for, huge investments. Supposedly, their team was based in Singapore. So all of a sudden, one day, things just stopped working. Or there was I think 2 different routers. They had 7 different routers because of different versions of upgrades and stuff like that. But they had 2 routers that just stopped working. This was a few months ago. When that happened, people were like, well, we don't know. People are communicating with the Multichain team, and Multichain team's like, we haven't been able to be in contact with the Multichain founder. And so there was a few issues with the routers, and they need to be upgraded, but we can't complete the upgrades without the founder. Huge alarm bells go off, right? Because what does that sound like? Sounds like it's pretty centralized.
Yeah, absolutely.
Right. So people start to panic a little bit. And there was I think a few days there's no communication, and actually it caused some depegging of tokens on specific big chains, because they couldn't be bridged out of those chains. Still, there was a lot of trust in the protocol. Maybe, I don't know, he went somewhere. There was a rumor of the Chinese government arresting him. But maybe, he left somewhere. Maybe, he got kidnapped. Maybe there's 1,000 things that people are sort of thinking about. What could have possibly happened to Zhao Jun? Go ahead.
Oh, Yeah, I just wanted to mention on the arrest thing. So apparently it's Zhao Jun's family that has confirmed that the Chinese police has arrested him.
You're way ahead of my story here, man.
Yeah.
So
Sorry. Sorry about that. Go on.
we're still a few months ago.
Jesus.
They were able to, the team was able to get the routers upgraded. So they were able to get access, get the routers upgraded. All the multi-chain tokens went back to peg, and the routers were executing perfectly. So for weeks, there was no issue. It seemed like everything went back to normal with multi-chain. Then all of a sudden, it happened again. The router started to shut down. There seemed to be like no way to bridge certain tokens. I think specifically like Phantom had issues. Then all of a sudden, all of the money that was locked in the Phantom bridge on Ethereum moved. So I think it was like $100 or so million. All of a sudden just moved off the Phantom bridge to like an EOA. So a individual wallet. So people were like, that's not normal. Like, what's going on? Can we get any feedback from multi-chain? And there was just radio silence. So at this point, everybody's trying to figure out, was this malicious? Are they doing an upgrade? Like, was this planned? So people were reaching out to the Phantom Foundation, and the Phantom Foundation says, we don't know anything about this, because everybody thought maybe it was something to do with the layer 0 deployment on Phantom and moving funds so that they can change bridge providers. Phantom comes out and says, nothing to do with us. Layer 0 comes out and says, nothing to do with our deployment. Then Multichain comes out and goes, yeah, we don't know how the funds were moved.
Oh my God.
So everybody starts to panic. At this point, it's like known now that like, hey, there's some sort of malicious party that is moving multi-chain tokens. They asked Circle, they asked Tether to, blacklist those contracts, which they do. They come and they basically blacklist the movement of those funds. And I think like 3 days pass and there's like no real updates. Then funds move again. So more funds start to get rugged from different bridges. Then immediately, like the hacker learned, they sold the Tether into ETH and started tornado cashing it. So now people are like definitely confirmed that this is some sort of malicious behavior. There was another like 60 million that moved that was supposedly the multi-chain team doing white hat hacking. So then the information comes out from multi-chain on like that Monday, and it basically is, hey, we're pretty sure that Zhao Jun has been taken by the Chinese government. We are working with it. We got communication with his sister. His sister is moving some funds to a secure wallet so that we can save and white hat some of the protocol. Then his sister got taken by the Chinese government. And now we're unsure. We're unsure if we have control over any of the funds, and we quit.
Oh my God.
And so I think to this day now, essentially the core thesis is that according to relevant parties, some rogue police officers have taken the money from Multichain and started to rug it. And then when they found out that his sister was helping to save it, they arrested her as well.
Oh, Lord. This smells fishy. This smells very fishy. Especially since what I found says that the arrest of the sisters, or of both of them, is confirmed by the family. But also, I would find it very strange that they would be operating that protocol in a country that definitely does not want crypto to be available, unless they were in Hong Kong.
They're supposed to be in Singapore. I think a majority of the team was. And so why Zhao Jun was in China, people were like, oh, was he always in China? But I mean, who knows? Could he have been visiting family? Could he be living there? I guess there's a whole lot of details that we still don't really know. But I mean, obviously we haven't, besides what the family has said and what Multichain has communicated, we're just taking that word as for what happened. There's still a whole lot of, is it the Chinese government? Is it some other party? Do they rug? There's so many things to sort of think about. And right now it's sort of just all in flux. Like the money's just gone. People are still asking about what to do with their bridge funds. Like Beefy as a protocol, we have to basically redeploy our Beefy token in order to offset some of the hack. So within our token, because all of our Beefy was bridged via multichain, and nobody can bridge back. A lot of protocols have to do that. Essentially, basically do a full migration in order to get out of this situation with multi-chain?
God, I don't know if it smells like fish, it moves like a fish. It's probably a fish.
I mean, it's just insane. It's insane.
Yeah.
This is like a storyline. Imagine like you're a normal person and you know, you come home from work and I go, hey, how's your day? And you're like, I don't know, bills. He's giving me a hard time. My boss said, he says I have to come in on Saturday. Oh, that's cool. Like, how's your day? I'm like, I don't know. My protocol may or may not make it based upon the Chinese government taking over one of the largest bridging foundations, and like everything's stuck now and we have to fee. And then his sister was trying to help, and now she's kidnapped by the Chinese government as well. Like, how do you even explain this stuff to the real world people? Like, it's ridiculous. Like, people look at you and go, what?
Yeah. Okay, baby. No, you got to understand. We can't go to Disney World right now because the Chinese government stole the funds of all these different protocols, baby. It's very difficult to explain. We have this money on the internet.
It's like if you wrote this up, people would be like, nah, that's not believable. That's...
God, Netflix, as I understand it, I think Netflix bought the rights to make a movie about Sam Bankman-Fried.
He might be the most boring thing that's happened in crypto.
You guys, forgive me.
Just a normal scammer.
At 6 in the morning, 6 a.m. EST, because this stuff is too crazy not to talk about right now. It's profound to see like what greed can do to people. And, it's not like people are going to forget who these individuals are. This kind of reminds me of Quadriga CX.
Yeah.
Like how the founder just disappeared. All this information came out about him, that he ended up being a scammer, and that
he was on his honeymoon.
On his honeymoon.
And he he would like had an issue with his Crohn's disease and died, and mysteriously, but nobody knows he died from that, but couldn't find his body or something else.
Oh yeah. And that documentary was cool because it told the story pretty well. But the thing that made me mad was when that one girl's like, oh, these people are just crazy or sexist or whatever for wanting to see the body. It's like, imagine if you lost $1 million and people are like, you know what? You're crazy. Yeah. You're a sexist because you have the audacity to ask to look at this guy's body to see if it's even there. I mean, that's pretty reasonable. I mean, what if he went to India, got plastic surgery, and then, changed his name? I mean, if you're rich enough, Do Kwon had multiple passports and IDs with different names.
Yeah. Well,
it's not unreasonable to think that someone could have changed their name and then went to another country, got plastic surgery, changed their look, shaved their head. I mean,
yeah, I'm sure it happens.
Yeah, and chances are that might be what's going on. Somewhere Zhao Jun might be in the Alps, just sipping on a coffee, going like, mission accomplished.
Yeah, you have no idea. Fortunately, I don't know if we'll ever know, but
I don't.
It did showcase a gigantic centralization flaw in bridge providers, and now like every time you think about like working with the bridge provider, it's almost like you're sort of like looking into that and with a microscope of like, am I doing this? Like, are we relying on the same sort of thing as we did with multi-chain? How can we like ensure decentralization and ensure like the same incident won't happen, over and over again? Ronin Bridge was, Polygon Bridge. Mm-hmm. Those are all small multi-sig signings that were able to get like taken and essentially drain those bridges. And so now we're seeing the same thing with multi-chain. Essentially, one node provider is able to, transfer all those funds or having that malicious node or taking control of it. So, those points of centralization, especially when it comes to moving billions of dollars of assets through multiple different blockchains, mm-hmm. we can't participate like that anymore.
Yeah, I think it's a bad thing, obviously, because all of these different protocols are now affected, and people who might have had funds bridged on multi-chain, they're obviously affected. I think I like to always try to look at the brighter side, and I'm a big believer of the free market. So I do think that this brings a lot of opportunity to entrepreneurs who are looking to create solutions that are decentralized and safe. So it'll be interesting to see what people come up with, especially when we've seen so many different bridges that have now been hacked from that other one in Solana, I guess. Another.
Oh, was it
Wormhole?
Wormhole. I mean, it's like countless, but I do believe that bridging technology is getting better. I think that, Layer Zero, XLR, Connects, like a lot of people are building really interesting products. And so we'll see if now we can get, a few trusted protocols. I think, at the end of the day, a lot of protocols are sort of relying on the canonical bridges like Optimism Bridge or Arbitrum Bridge or in order to bridge funds, even though, as a user, it's not as friendly because of withdrawal periods, but it's the safest. Now with ZK technology, we're going to see improvements around that with ZK proofing. Things happen on certain blockchains, making it even more secure. So I think that there's definitely a lot of progress made in this. And so hopefully we'll get to a point where it becomes less and less of an issue. We see smaller cases of something like this happening. But man, it's, we didn't think we could survive, like I said earlier, Luna. Didn't think you could survive the fallout of FTX, and Multichain, $1 billion bridge falling down, would be another one where we thought would be the end. And hey, we're all still here. We're all still building. We're moving on. We're adapting. So maybe it's all of these negative things that will just make us a little bit stronger. That's what I believe.
And I think that's a powerful note to end on. I think it's incredibly momentous that there's still so many people that haven't quit and just continue to push forward and to make better tools and better applications for users everywhere. And with that being said, thank you so much for watching the D-Files. I know this is a little bit more of a somber episode, but so much is going on, and I hope that this could bring you some comfort. And a big shout out to our producer, Beefy, the multi-chain yield optimizer located on 21 different blockchains. If you got crypto, consider using Beefy. Anyways, have a good night, Weso.
Right.
Or morning, actually. Have a great morning.
Talk to you next time.
Cheers.